What's up, guys? Hope you're all doing well today. Welcome back to Mark's Stock Review. Today's going to be on the recent IPO JFrog. I'm going to give a brief overview of the company, some financial comparisons, my personal price target, and a summary. If you guys find this video helpful, please do consider subscribing. I upload 2 to 3 new videos per week, short, structured videos. I keep them short as possible because I know your time is valuable. That said, let's get into it. Moving on to JFrog. JFrog is a continuous software release management company for digital transformation. They provide tools for software companies to enable delivery of software updates on any system, anywhere in the world at any time. JFrog was founded in 2008 and headquartered in California. And before we move on, I always like to disclose whether I own shares of the company that I'm doing a video on. And in this case, I do not own shares of JFrog yet. I may decide to initiate a position, but as of now, I do not own any shares. JFrog, as well as OPES, the SPAC associated with BurgerFi, are both high on my watch list this week. I've been meaning to get into BurgerFi for a while now, so I think this week I may initiate a position. Okay, back to JFrog. In a nutshell, they bridge the gap. They streamline the process from software developers to those deploying the updates. They increase speed, security, and they allow companies to stay competitive and engaged with their customers. JFrog considers themselves a quote-unquote liquid software company, and described by the co-founder, CEO, and chairman on CNBC, they make sure software updates are flowing seamlessly from developers' fingertips all the way to end users. JFrog has 58 paying customers currently, including the top 10 tech companies. That would include Facebook, Google, and Amazon. So that's very impressive. JFrog's share price has had quite the ride, both pre-IPO and post-IPO. The initial IPO range was only $33 to $37, upwardly raised to $39 to $41, finalized at $44. Opening day, I believe, was around $64, but by noon, it was already $71. And at the time of this recording, the share price is sitting at a whopping $74, double the high end of the initial IPO range. Let's take a look at the revenue growth next. Fiscal year 2019, 65% revenue growth. First half of 2020, 50% revenue growth. You can see how it's 69,000 up from 46,000 same time last year. 50% revenue growth is really good for a company that just IPO'd from my point of view. But let's take a look at some other companies to get a sense of whether we should be chasing JFrog or whether we should wait for a pullback. Let's first look at nCino. They have a very similar revenue growth of 52.5%. They're also a software as a service company with negative net income. They provide cloud-based applications, including workflow and enterprise content management. They've also been around since 2011. Next, we have Zoom, not in the same space as JFrog, but I just wanted to show as comparison, they have a massive revenue growth of 355%. Next, we have Snowflake. Most people know about this company. They have a very impressive revenue growth of 120%. They're also a cloud-based data platform. They consolidate data into a single source for clients, then they transform it into business insights. Okay, so is JFrog overvalued? Well, if you look at Snowflake and Zoom, their price to sales are much higher, but they're also much more deserved because of their revenue growth. JFrog, on the other hand, has a very similar revenue growth to nCino, but a much higher price to sales. So in that sense, you may consider them overvalued. However, it's one metric. They're two different companies, but it does serve as a reference point. This next picture is going to give you a sense of how massive the share price of JFrog has moved since even before the IPO. And as you can see, even scaling the chart was difficult for JFrog. So what's my price target for JFrog? Well, since they're still in price discovery and no clear base, I would start a position at $65. And I wouldn't worry too much about whether I lower my cost basis with further transactions on JFrog. I would just make sure I really spread the transactions out over a long period of time due to the high volatility on this newly listed IPO. To sum it all up, JFrog has a very interesting business model and they're in the right space. It's trending and definitely growing very quickly. Next, they're arguably mild to even moderately overvalued at this point, so you may want to wait for a pullback before initiating a position. They're established, they have decent growth with major customers. One more thing I did not mention before, the CEO said that they have no field sales and no field representatives, and quote unquote, our products are bought, not sold. So that to me is a very bold statement. And if that ends up being true, not to mention the cost savings, that's a real positive for this company. And that does it for this video, guys. I hope you found it helpful. If you did, please consider subscribing and hitting the bell notification and thumbs up. I do put out 2 to 3 new structured videos per week. Keep them short and sweet to value your time. That said, I hope you guys have a wonderful day and I'll be talking to you soon. Take care.